Well, let me take you to the next discussion. The NHAI is lining up 40 new road projects under the hybrid annuity model. And one company that's already bagged a few of such projects and is probably on the lookout for more is Welspun Enterprises. So will the company be bidding for more projects? Let me ask this to the management. Mr. Sandeep Garg, the MD and CEO of Welspun Enterprises, joins me on the show. Mr. Garg, good having you. Thanks so much for speaking to us at Bloomberg Quint. This is Neeraj here. Your balance sheet probably gives you the leeway to go out and bid very aggressively for new projects as well. You've bagged 6 in a very short span of time. Are you looking to go gung-ho into the new set of 30 or 40 that are up for bidding?
Thanks, Neeraj, for taking me on this show.
Pleasure.
Yes, we are looking for future orders. The balance sheet is strong, the industry is strong, and we are looking forward to acquiring at least 5,000 crores worth of order going forward from the bids that are in the offing. We expect the bids to start from September onwards. The bidding has been a bit slow at NHAI because there were a lot of bids that went out in March and April. So I expect the activity to restart in September, and we surely look forward to acquiring at least about 5,000 crores worth of order. As far as the aggressive is concerned, I would want to clarify that we are going to be a stable player. We would not get very aggressive in terms of pricing the projects. We believe that the risk and reward balance at a particular IRR, and that's the IRR at which we will be bidding these projects.
Would there be enough room for choosy players? Let me use that term choosy in a positive way, Mr. Garg. Would there be enough room and enough orders for choosy players over the course of the next 12 months? The reason I ask this also is that we've seen a lot of international players now coming in with this whole new set of models that NHAI has now started giving out road projects with. So there is competition not just from the strong balance sheets of the local players, but international financial firms as well, trying to make a beeline into the Indian road project.
See, I would only say two things, that local players who have strong balance sheets and have an ability to execute themselves, they are self-executors, they are close to their capacity in the order book, both in terms of the financing and in terms of the execution. So the local play is going to be a bit limited between the players. However, new players will come in. If there is a work, there will be players who will come in. My belief is that the international players know the business dynamics pretty well, and they are going to be asset-light models. They are not going to be self-executors. So we will be having a level playing field for people like us to bid and win the projects. I definitely believe with the currency hedging risks for the foreign players, for them to get their returns, the Indian player would have an advantage over them.
Interesting. You mentioned a couple of numbers, Mr. Garg. Just want to dwell upon that a bit. I believe the current order book is about 5,600 crores. Did I hear you say that you're hoping to bid for another 4,000 or 5,000 crores worth of orders? And if that is indeed the case, is there a target to the order book that you have for end of FY19 and with the increasing size, maybe for the quarters ahead?
I want to win about 5,000 crores of order going forward, so my bidding is going to be about 6 times of that order book that we need to target. I expect this order, this year's turnover to be in the ranges of 2,000 crores. So with 10,000 crore orders in hand and 2,000 executed, I expect the order book to close at about 8,000 crores for this financial year.
Okay, interesting. Let's talk about the nature of the orders as well, Mr. Garg. And I also want to dwell a little bit upon how the quarter went by for you, because I don't think we got a chance to speak to you post your quarterly numbers. Actually, let's first talk about those quarterly numbers. If I just look at what you did in the June quarter, there was an uptick in the revenue front, but margins, on a sequential basis at least, declined a little bit. How would you sum up that quarter, and how is the current quarter, 2 months of which have passed, looking like?
See, let me put the numbers in perspective. First of all, the revenue grew by more than 70%. Since the money that was on treasury, which was earning return, got deployed into the business in terms of equity, and the equity returns and the business execution will take place post the appointed date, which we achieved for 2 of the projects in February only of this year. The revenues recognition were not as much as we would have done if the other 2 projects for which we have already done the financial closure had also achieved the appointed date. I'm happy to announce that this quarter we expect those 2 projects also to be achieving the appointed date, and then we would be executing 4 projects simultaneously, which makes me believe that our revenue growth for this year on a FY to FY comparison basis should be twice of what that last year was. Now, in terms of the profit margins, the operating profit margins have been consistently rising. However, because the treasury is getting deployed in the business, the treasury return are depleting, and hence you may be seeing at the consolidated level the numbers are not in the same sync as the revenue is growing. There's another misnomer that takes place in the interpretation most of the people do on my results. What happens is on the other income, the whole investing or the analyst community takes it away as the interest income. That also has a component of notional index adjustments to the extent of 4-5 crores, for which the cost comes in below the line of EBITDA or exceptional items, whilst the income goes into the other income. So there is a skew of almost 5 crores on the results. So if you look at the operational performance, we have been consistently improving in the ranges of about 9 to 10%, and this year we expect it to be in the ranges of about 12%. So gradually, as the volumes will increase, the EBITDA will improve, and the investments made from treasury into the equity will start yielding results.
Interesting. I think very recently, at least as I'm reading one of the analyst notes, you as a company have spoken about how there is a possibility that you might double your revenues in FY19, and that alone will take care of the kind of expansion that people anticipate you as a company to show on the margin front. Are these numbers correct?
That's absolutely correct. We are, if you see the year-on-year FY18 Q1 to FY19, the revenue grew at about 75% or there around. So we expect, as these 2 new projects will reach their appointed date status, the revenue growth will be tremendous in the Q3 and Q4, and we expect to clock at least around 100% growth on the last year's revenue.
Interesting. Have you started work on the Chikali Tarsod as well as the Anta Simaria projects in Q2? I think that was the expectation.
So we are expecting, as we speak, we are expecting this week an appointed date for Anta Simaria, and we are expecting the appointed date for Chikali Tarsod in the week thereafter. Both these 2 projects will start throwing up the revenue. We are fully mobilized. We are ready to go. The land availability in terms of Chikali Tarsod has reached the level that the work can open on all fronts. In terms of the Anta Simaria, the complete mobilization for the river, which is the major portion of that project, is already done. The testing is already done. The well enabling works for the well foundations have already been done. So we are in a very good shape to hit the ground running post the monsoon season, and the appointed date is taking place at the right time for us to start utilizing the time effectively as soon as the appointed date takes place.
Interesting. Okay, so we'll wait for that announcement and then maybe talk to you about those then. Just one quick question, something which is probably non-core and which is the oil and gas space, though I believe your investments are sizable there. You have stated in the past that you will look to monetize these investments in the assets at an appropriate time. I just wanted to get a sense about whether you believe the appropriate time would be a result of a size that these blocks do achieve, and therefore, if they are at least a particular number of quarters away before you even think of monetizing them? Or are there other factors which will lead you to monetize them?
See, the right time for monetizing will be two conditions. Number one, obviously, that we need to be reasonably sure about the resources that the block has, and hence we can create value out of that resource available. Second will be, the stage will be what is the commodity price and the forecast for the commodity price. So since most of our block other than one are gas bearing blocks, we believe that gas is the future fuel from the oil and gas combination. So we believe that the monetization of those assets will take place. We are surely a few quarters away before we are able to establish how much of resource is available and how much of it is exploitable commercially viably.
A few would be what, 2, 3, 4 quarters away?
A few would mean at least a couple of years.
Couple of years, okay. I'm there.
I would say they're about 2 years away.
Okay.
Yeah.
Okay. No, that's being very candid. Okay. I just have one final question, Mr. Garg, and which is on a robust showing that you did in FY18, you've already guided to a revenue doubling and an expansion on margins as well. Your balance sheet is not stretched at all. Are we to assume that the bottom line performance from you as a company would be even better than the top line performance that you're talking about?
I surely believe that that will be the case, because the volumes will increase, our fixed cost will get a portion on a larger revenue base, and hence the bottom line performance is definitely going to exceed what we saw in FY18.
Well, seems to be exciting times, Mr. Garg. We wish you all the best for these, and actually we'll look forward to talking to you immediately post your numbers, because it seems like a fairly interesting times for you as a company. Thanks so much for joining in today.
Thanks, Neeraj. Thanks for taking me on this show, and look forward to talking to you post the Q2 numbers.
Yep, pleasure. The pleasure will be ours. Well, that's a very confident management of Welspun Enterprises talking about this year at least, and arguably the outlook ahead. The markets flat as flat can be. The Sensex, Nifty Bank absolutely flat and moving within that very narrow range for most part of the early morning trade. I don't think the mid caps and the small caps have done much different. Just remember JSW Steel and Lupin, the two large names which have had interesting moves at the start of the trading day. We wrap it up on this leg of Indian Open. Up next is the F&O Show.